and a very warm good morning. You're watching News9. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy. It's a cause of joy here on this Friday evening. My colleague Suyash Maheshwari, of course, to discuss what is causing so much joy on this Friday evening. Fifth straight day, markets are relentless. Bulls are running relentless on the Dalal Street.
So another day and another new peak for the Indian market, Shweta. Now today the market opened about 0.2% higher. Both Sensex and Nifty were up about 0.2% higher. Nifty scaled a lifetime high of 20,173 levels, and BSE Sensex was up. Scaled a lifetime high of 67,774 levels. Mid caps and the small caps indices were also up about 0.5% in today's morning trade. Now, if we are looking at individual sectors, most sectors were trading in the green, barring FMCG, realty and media stocks. Apart from that, IT stocks, Shweta, and auto stocks were some of the best performers in today's morning trade. They were up about 0.8% this morning. Apart from that, we are also seeing that a number of stocks, a number of heavyweight stocks were trading in the green and participating in today's rally and doing pretty well early this morning.
All right, number of stocks there doing pretty well this morning, and I think there are lots of triggers here that we are tracking. In fact, just before this show, we were talking about what's driving the exuberance. Perhaps Ashish Maheshwari, who is the director at Arihant Capital, joining us on the show, can elaborate on what's driving the exuberance in the markets. Ashish, thanks very much for taking time out this morning. It's a good day to be on the show. Tell us what's happening here. What is driving the bull run?
See, I think few days back, whatever the turmoil we saw in small cap, mid cap, and that carnage was just a one-day affair. So it has given a lot of strength to the market that whatever has happened was just only for a day. Second thing is, as a lot of funds are coming with various thematic fund or sectoral funds, so a lot of money is again chasing good and quality mid-cap stocks. So we have seen that after that carnage that we saw on that day, the stock have really bounced back, which has shown a lot of confidence. Third, there is again the macro data is positive. Your factory output has increased, inflation is controlled. So it is giving an impression that interest rates may not go up in this year now. So a lot of triggers as far as Indian economy is concerned, a lot of agreements which were signed during the G20 events, etc., and the way foreign investors are coming to India. I think market will remain bullish, and I'm also bullish as far as short to medium term is concerned.
Now, Shweta, apart from the reasons stated by Mr. Maheshwari, the global equities are doing fairly well. Now, Dow had one of its best days yesterday in over a month. The Dow Jones Industrial Average Index was up about 1% yesterday. S&P 500 and Nasdaq also gained about 0.8% in the morning trade. European stocks gained about 1 to 2% this morning. This was on the back of the ECB raising rates, but also raising rates to all-time high levels, by the way. By 25 basis points have raised the rates. Now it's at 4%. But they also stated that, more rate hikes may not be in the offing. Because of this, the market saw a lot of positive impact, and that's why we also saw a positive handover for the Asian markets also. Most stocks opened today's session in the green, and the expectation has also helped Indian markets do fairly well in today's morning trade.
All right, Ashish, we continue to track not just domestic cues here, which augur well for Indian markets, but overall globally, there was a sense of gloom and doom since the start of this year, which was reflected in the market sentiment everywhere, from the US to Asian markets. Do you think the worst is now over?
No, I don't think so as far as world economy is concerned, because again, crude is inching up to 93 USD. Besides this, still we have to come across a good set of data as far as US markets are concerned, though there's some positive data started coming in from China because of policy related impetus, but still there are shadows on the world economy because of US Ukraine thing. I think it will take at least one more year that the global economy will rebound. So not too many choices are there, but I think in US also tech stocks have started again doing well. At the same time, other European markets are also consolidating and trying to move because there's no negative trigger as such, but still data doesn't suggest that economies are improving and like whatever rally we are witnessing in the equity market, I think in the overseas market, this slide after a long phase of consolidation, some buying is there, but real picture is slightly still different and difficult there.
Okay, and I also, before I let Suyash in, I know he's very excited, but I also want to quickly understand on inflation, what's the projection looking like, not just for India, but also globally. ECB, they're saying that this perhaps could be the end of rate hike cycle. FOMC perhaps not likely to hike rates, at least that's what economists, analysts are saying in the upcoming FOMC meeting. All in all, pointing towards inflation perhaps coming within or inching within the comfort zones of various world economies. Do you think inflation as a problem is now under control, or you'll have to wait for another month to perhaps say that?
So I think only game spoiler might be the crude prices right now. But otherwise, if you see even the food side, inflation is almost stabilizing. So the prices of rice or sugar or wheat, these are the basic commodities. They have gone up, but there's a limit to what extent your commodity prices can go up. At the same time, many other prices, particularly the metal sector, etc., they are stabilized or they are quite below from the peak levels. So, in my view, inflation is not something a cause of concern, at least to the investors' mind. But slowing down of economies, I think, can create bigger problem than inflation. As far as India is concerned, I think 6.8 kind of level of inflation is still okay, and we are going to see even further downside in inflation maybe in the next month.
Right, and since we're talking about inflation and you brought up crude again and again, what is the comfort level for crude worldwide? Also, Hardeep Singh Puri, the oil minister, the other day in a press briefing said that India's comfort zone for crude would be about $80 to $85 a barrel. Do you see it coming down to 80 to 85? What's the comfort zone on crude globally?
If I could also interject.
Yes.
So, sorry to interrupt you. WTI crude, Shweta, has crossed $90 a barrel for the first time this year. Brent crude is above $93.5. So, a big concern. A lot of analysts are saying $100 is a near-term possibility, sir.
What's the comfort zone on crude?
If you ask me, like it will be now $85 to $95 range. Because now we can't see crude going back to 80 or 75 odd levels because first of all demand is there in the crude. We have seen the inventory of US also coming down because of again a lot of travel has happened in the month of in summer months in Europe as well as in US. So inventories have really come down globally. And second, the Saudi and Russia, they are also not producing, enough oil, and they want some higher prices as far as crude is concerned. But 85 to 95 dollar rate, I think still market will absorb because other commodities have also moved. So why crude will also not take part in that trend. So I think let's be present and be practical and let's look at 85 to $95 as a comfort zone now instead of 75 to $85.
So 85 to $95, as you said, will be the comfort zone. But is there a possibility that crude could perhaps scale that $100 mark, which has been, a concern raised by many analysts, many brokerage firms?
So only the problem is first crude is one of the most volatile and where whatever the price is movement takes place quite unexpected because few people control prices in crude per se. But the only thing is at $100 again, what kind of demand is going to emerge? Again, you are going to see a lot of pressure coming from various who's to lower the prices of crude and increase the production once again once it inches up towards 100. We should not forget that economies are still not out of the turmoil, maybe US or European market, all are having a lot of pressure on their economy. So 100 is something like which is having more psychological impact as far as crude prices are concerned. So surely some pressure is going to come at $100 and I see crude prices in this year remaining in two digits.
So now before we get back to the markets, I just quickly want to get your view on gold. Now gold has scaled to a 3-week low yesterday. What's your outlook on gold, sir? Because I was also reading a report that gold in fact since 1999 to 2023 has outperformed most benchmark indices of emerging market except India. So perhaps time to look at gold now?
No, I'm not expert on gold, but still, in my view, as if we are going to see strength in US dollar, gold will also, over a period of time, will try to catch up. This is whatever the pause we are witnessing in the gold prices is for quite some time. But as there's no trigger in the gold as such, and most of the hedge funds, they are also not finding gold as a attractive investment option, and they are putting more money into more into equities and other products. So this is the reason gold and silver, they are both are subdued in, as far as precious metals are concerned. And in my view, at least in 2023, I'm not expecting any big rally coming in gold for so far.
Fair enough. So in the last 10-15 days of rally that we have seen, India VIX, the volatility index has largely remained below the 12 mark, which suggests that the volatility has been low in the market in the recent run up to all-time high levels. Does it augur well for the bulls?
Of course, anything below 12 is always good, and toward the volatility, bulls will be most happy persons on the planet. So I think it goes well with the market, and this is the reason that a lot of money is also coming to India because the volatility is low and there's no fear as such what's going to happen in 3 or 6 months' time. So most of the calls which are being taken, whether it's a large cap or mid cap, they're on bullish side only. So it's positive as far as Indian markets are concerned.
Now, what will be the resistance levels for Nifty? Because of the recent run up, what are the near-term resistance levels for Nifty, sir?
So I think for some time we are going to see a good run up in Nifty, particularly stocks and mostly individual stocks. I'll be more comfortable than indices because indices will move in the slightly narrow range in my view. So some profit taking, bout of profit taking will keep on coming in Nifty, but still at least I am expecting 300, 400 points more possible in Nifty from current levels where some resistance will come. But we are going to see for sure new highs maybe in next week also.
All right, and we'll see what those new heights are. But Suyash, for now, let's also take a stock of all the stocks that you're tracking this morning.
Yes, Shweta. So one of the stocks that has been in the news lately was Infosys. Now, Infosys has landed another $1.5 billion contract. Now, you have seen that, in the past 1 month or so, Infosys has had nearly $5 billion worth of contracts, Shweta. Last month, we saw its deal with Liberty Global worth 1.62 billion. Earlier this week, they had a deal with Europe's Stark Enterprises, which was worth about 1.5 billion. And as a matter of fact, the stock has shown good strength in the last 1 month. The stock has gained about 6%. Or so. So, sir, if you can also give us your view on Infosys stock, how is it looking on the price charts? Can we see it scaling 52-week high before the end of the year?
See, if we see like last 1 month performance now, it's almost up by 9%. And if we large cap stock like Infosys, last 3 months performance 9% is really good. As far as 52-week high is concerned, I think it's still 150 odd rupees away from touching 52-week high, but it will come. In my view, the kind of deals now Infosys is grabbing, it shows that again aggression has come in the management and whatever the pipeline and what they have sounded off in the last quarterly results, they have really started materializing. So now this is really good time to look at even Infosys, TCS, HCL kind of stock which have underperformed compared to large mid-cap players in IT sector. So Infosys can be a good bet at 1500 level for sure.
Okay, and what's your take on the overall IT pack?
Overall IT pack, I think there are two tailwinds. First of all, again, you are seeing a weaker rupee compared to dollar, which is again adding value vis-a-vis like what the USD used to be 1 year back from 75. Now it is 83. So you are having that advantage. Second, again, as Nasdaq has started moving up, so you are going to see again buying coming into Indian IT pack. And third, we should not forget that IT sector is the second largest component of Nifty after BFSI sector. So if market is going up, IT just can't remain in hibernation and continue to underperform. But this is again a sector which will start catching up soon, and we have seen that trend has already started. So, but right now I'm more bullish on large cap IT than mid cap IT.
Now, Shweta, that's the view coming in on Infosys. Some of the other stocks that were in focus this morning was Bharat Forge. Now, Bharat Forge has extended its partnership with Paramount. Now, it will create a wide range of armored vehicles for Paramount's global customers. As a result, the stock was up about 0.73% at 9:35 a.m. this morning. Another stock that we were tracking this morning was GMM Folder. The stock has gained about 1.5% in the morning trade. The stock actually is up about 19% in the last 1 month. The trigger why the stock has rallied in today's session was that it has fully acquired professional mixing equipment for a deal worth $7 million. Another stock that was in the news today was Dixon. Now, Dixon is looking to open a smartphone plant near New Delhi, and it will invest around 400 crores over the next 3 years. As you can see, the stock saw some positive momentum in today's morning trade. It was up about 0.5% at 9:35 a.m. this morning. Another stock that we were tracking was Shakti Pumps. Shakti Pumps opened 8% higher, had surged to about 12.05% by 9:35 a.m. this morning. This was on the back of Shakti Pump bagging orders worth 293 crore rupees, over the last few days.
All right, those of course are stocks in focus through the day. Ashish, before I let you go, I think it's also important, since we continue talking about the macroeconomic picture and the perhaps possible impact of rising crude prices. I also want to know from a domestic point of view, since we are a large importer of crude oil, what's the impact going to be on rupee? You touched on rupee. Rupee perhaps is also sliding opposed to dollar day after day. Will there be a further slide in rupee if crude prices continue to scale up? Will it be immediate? Will it be in the long run? What's your view on the rupee?
Yes, there will be, of course, some pressure on rupee. Earlier, we were importing a lot of crude from Russia, but now again the issue is that we were trying to make payments in INR, and Russia is finding difficult now because they are having big current account surplus because on account of buying in INR because of that particular factor. So that those days of very cheap and discounted crudes are almost over as far as Indian markets are concerned. So you need to pay whatever the global prices are there. And the way now Indian economy is moving up, our demand for crude per se won't come down. So whether 95 or 98, you have to buy crude because your economy is doing well. So certainly some pressure is going to be there on rupee. Only solace is as a lot of money is coming into Indian market, and we are sitting at the foreign currency reserve of almost $600 billion. So this is, I think, will act as a cushion. And once his crude will start going down, we are going to see again rupee in 80 to 50, 80 to 70 kind of range. But I'm not expecting now USD INR below 82 maybe in this full year.
Also, if you are looking at rupee, one of the reasons perhaps because rupee is at record low levels, that's why we are not seeing foreign institutional investors coming back to Indian markets, because rupee has been falling about 2 to 3% against the US dollar. So it erodes that extra alpha that you're looking for in emerging market sectors. So if you're making about 12% on a year, 3 or 4% you lose because of currency conversion. So perhaps the markets for FIIs is not looking too promising unless the rupee gains some strength against the US dollar.
Okay, Ashish, we had Gaurang Shah on the show yesterday, and he said FIIs, I don't know what they're waiting for. They're too late to join the party already, and I mean, God knows what they're waiting for. Maybe they know what they're waiting for. Ashish, is the trend going to reverse? Are they going to come back to India? And if yes, what's your outlook on when that's going to happen?
No, actually, if you see June, July, August data, they were all biased. Only thing that density has slowed down from 53,000 to 33 to 17, and this month so far negative data is there. But this is something out of the domestic compulsion or wherever they are operating, because the bond prices have really come down and the way yield has moved up. They were not having any other option but to sell emerging equities. Otherwise, if you talk to any FIs on the planet, they are bullish on Indian market. But when you are having redemption in domestic market, you need to sell. Another thing is that foreign markets now, money is not that forthcoming because the way inflation is there, a lot of saving has come down from retail investors or pension people, etc. So some slowdown is going to happen, but I think we are not that much now dependent only on FIs. And domestic investors are gaining strength month over month. So I'm not worried as far as that angle is concerned, though they are missing the bus.
All
As
right.
Sir said, that FIIs may be absent, but domestic institutional investors, Shweta, have been continuously providing support throughout the year. They have been lapping up Indian equities, on a month-on-month basis. Also, now we are seeing retail participation come back. The activity in the primary market is picking up. So perhaps we are seeing a change in times where the retail money followed the smart money. Now smart money will come back after the retail participation is picking up or the domestic participation is picking up.
All right, a lot of exuberance there in the markets overall, and the exuberance continues for the fifth straight day today, and perhaps hopefully will continue. That is exactly what Ashish is saying. He's saying the markets are going to scale to a perhaps newer highs days after day.